Hi, guys, ladies and gentlemen. This is Jimmy. Hope you guys are doing well. Normally, it's Adrian CryptoBurb who's doing a live stream. The legend himself, he's on vacation. So we decided to do a live stream because a lot of stuff have happened in this market. Let me share my screen quickly. Today, I want to cover actually a few things with you guys. First, and I think this is really important, mindset and trading psychology. What happened and what's happening in the minds of us, like what's happening in the mind of a trader. I want to quickly touch base on Bitcoin, the S&P, and maybe some other stuff as well. Guys, if you can hear me, let me know in the chats. I'm always paranoid when it comes to technology. I don't trust anyone. Always verify. Let me know, guys. Also, where are you guys from? Where are you coming from? And how's the weather? I'm now in the Netherlands. The weather is pretty good. Let me share the screen. Yeah. So a lot of things have happened, and I think we should start with this one here. I think what we need to realize is the dump of yesterday was a pretty strong dump, especially when you watch Bitcoin, the different charts. Actually, a few things have happened. One, unfortunately, Bitcoin lost to 200 MA, which is like technically you would say this is not good because a lot of people, they determine if it's a bull or bear market based on the 200 MA. But there is something that, it happened yesterday, and I'm pretty, it maybe sounds strange, but I'm pretty happy with it. And that's like long wicks on different exchanges. It took out a lot of liquidity. At least what you're seeing now is, I still believe it's a healthy structure. We still see higher highs and higher lows. And this low was being taken by a wick, so it hasn't closed below this wick. I believe if Bitcoin revisits this gray area here and it closes below this gray area, then this most likely will induce more selling pressure. If we look to like the different exchanges, the wick was here even deeper, so it took out like all these lows. As you can see, people who bought, let's say, Bitcoin here, they were actually in a profit, right, for a long time. And then suddenly, bum, this wick came. And a lot of people, they got liquidated. I think, what was it again, 1 billion in liquidations. I think I read something like 168 or 170,000 people, they got wrecked, liquidated. I've been liquidated a few times. I can tell you from my own personal experience, this is not fun. This is not fun at all. So yeah, other exchange like the Binance, but like not the futures, it has not took out these lows, as you can see here, but on many different exchanges it did. So I personally believe that whenever you see like a flash crash like this one, of course things can continue. But a few things will happen in our minds. And the first one I want to talk about is negativity bias. Negativity bias is when we give a negative event more emotional and mental weight than a positive event. Let's digress a little bit from trading. For example, in normal life, when you're walking outside and you see, let's say, a dog or a cat, these are like pretty harmful, animals. They're not that dangerous animals. And then you suddenly see a tiger. Of course, your brain will get way more triggers when you see the tiger than the lion, or than the dog or the cat. Or another example is you're walking outside and you're seeing 10 people, they're crossing you on the street, and all of them are giving you a smile, but only one is going to give like this really angry, aggressive look, like this one. I bet that these other nine positive events will be overshadowed by that one negative event. And the same goes with trading. We give more weight to a negative event and a more recent event. So, what's actually the most recent event here? The most recent event is this drop. It's a pretty strong drop. I agree. And this is also a drop that induces what? A lot of fear and anxiety and stress. It destroys hope. We all know most people, they like to buy when everything goes well, when they see a lot of green. Contrary traders, they go against that crowd, and I'm one of them. When we had let's say like the crash here in March, this is another good example of recency bias. Look, this is a pretty strong move from here to here. And once Bitcoin made that move from 25K to let's take 20K, a lot of people, they gave up. But the only thing what Bitcoin did was retesting the 200 MA. And then again, Bitcoin made like a really good move up. And listen, a move like that doesn't happen by accident. It's not a coincidence. And then it jumped up again. And here, Bitcoin, of course, failed to break this major resistance. And now what I'm seeing here and here, I see the same here when it comes to the current sentiment. So you also should know is Bitcoin was actually in a phase of indecision. Both sellers and buyers were anxious in this period. This period included. And then suddenly, when a move comes, then the move, becomes really volatile and really strong. This is exactly what we have seen: a really strong, volatile move to the downside. So you would say, like, what now? What can happen now? Well, the answer is only God knows. But my guesses, my high probability scenario is probably Bitcoin will find a bottom, and this would be another higher low in this structure. So you guys still can see all these lows are getting higher and all these highs are getting higher. So I assume that this structure will get maintained. The S&P, for example, it's also not a coincidence that the S&P makes a move of 30%. 30% in S&P, it's a lot. I mean, just imagine how much money you need to push that, and the shift in sentiment to shift it, and the psychology to shift, from bullish to bearish. This is not a coincidence, and it's also not a coincidence that the S&P found resistance here at this level, this gray level, and it wasn't also not that far away from its previous all-time high, 4.7%. And it's also not a coincidence that we're seeing here a rising wedge. And these are actually the setups I like the most. I like and I love rising wedges. I love and I like falling wedges, especially when it's combined with a strong form of divergence. Not per se divergence on the RSI, but it could be a divergence of the OBV, MVI, or something else. In this case, there were like, let's say, 6 different oscillators that signaled a divergence. When the rising wedge, was forming, there's always a possibility that this rising wedge can turn into a running wedge, meaning it gives like a bearish a thesis, and then suddenly it breaks to the upside, which didn't happen. So this thing, well, with S&P, I would say, of course, nobody knows where this goes, but the overall structure, it doesn't look that bad to me. Now, I want to talk about, and this is actually this is actually what I love to do, to talk about trading psychology. I think it's now time to share some other stuff with you guys. By the way, if you guys have any questions, drop them. Also, make sure to give this video a like, share it with your friends, or comment. If you agree with something, you can comment. If you don't agree with something, you can comment. If you don't like me, you can comment as well. So just make your drop your comments. Happy to take any questions, by the way. So I want to go back to the liquidations. I think, well, it's not what I think. I'm pretty sure about this. Whenever there is a crash, just like the crash we had yesterday, and the crash we had with Bitcoin in March, and here in June, I still can remember this day as the day of yesterday. I think it was the SEC, right? Labeling a lot of the coins as securities, I think. Whenever these big drops happen, a lot of things will happen automatically, cognitively, like in your brain. This is something that needs to be addressed, because I'm afraid if you cannot regulate yourself, you cannot manage yourself, you most likely going to make a lot of mistakes, even though you have an edge. If you're losing money, this pain is really strong, biologically, mentally. The pain of losing money is maybe 3 times stronger than when you gain money. So if you lose $100, you basically need to make $300 to offset that pain. Just give me 1 second, guys. I'm gonna try to find my other slides. Oh yeah, it's here. I'm going to remove myself from the screen so you can see everything. So first, the fear and greed index. I believe the fear and greed index is not something you want to use in isolation, but it gives you a understanding where what the current sentiment is. Whenever the sentiment is really low, there's not a lot of buying liquidity. There's a lot of selling liquidity, right? And this is something you want to be aware of. Like now, this is a good question to ask yourself: who wants to buy? And if you ask yourself, do I want to buy, or do I want to liquidate my current positions? Ask yourself, and why is this? And how do other people, other market participants, think about this? And what do market participants? Is a buyer, a seller, or someone on the sideline that's also a market participant? Think about that. What are they going to do? The sentiment is not all-time low, but it's pretty low. If like year to date, it's pretty low. I mean, the real low of this year was in March. It was this one, but it is like the lowest low we had this year. So of course we still can go lower. But I reckon this is my thesis. I think that probability is not really that high, and this is the psychology of the Bitcoin cycle. Probably everyone knows this. I think it's really good to ask yourself once in a while, where is Bitcoin actually, and where is what are my altcoins? I know most of you, many of us, perhaps including myself, we also trade altcoins. But um, understand that sometimes Bitcoin is in a different cycle than the altcoins, and then ask yourself, where are my altcoins at this moment? I bought some altcoins this year. Not gonna lie, they are like in my situation. They are in this thrill phase or belief phase. Um, some of my altcoins are actually in the panic phase. And now the question is, where is Bitcoin? And where are you in this cycle? You also have your own psychological cycle, your own psychology cycle. Where is you? Where are you in this whole, in this whole cycle? And what does this do with your decision making process? This is something you want to be aware of. I know a lot of people, when they wake up, they check Twitter, they check WhatsApp, they check TradingView, they check their alerts, they check a lot of things. But the first thing you want to check is like checking with yourself first, and then checking with the rest. Here are actually a few things I want to mention before we're gonna move to the next few points. Is one, it's such a shame that a lot of brilliant, smart people like you, um, some of you, maybe most of you, you guys don't have a vision. I coached a lot of people, traders, but also non-traders. When they want to change something, I quickly figure out that they don't have a vision. If you don't have a vision, you have no idea where you're heading to. So basically, you're gonna perish. You need to have a vision for every important element in your life. If it is career, family, intimacy, relationships, health, you need to have a vision. Otherwise, you're a boat on the sea with no direction. You will not achieve a lot if this is you. So you need to have a vision. Secondly, this is like an NLP presupposition: is there's no failure, only feedback. If you lost money, it can happen. It's not the end of the world. I would say double down on the competences and the skills and knowledge, um, maybe screen time, and execute with a small position size. And I always say, like, you need competence and confidence in this market, right? Sometimes when a crash, just like the crash we had yesterday, happens, this has a severe impact on your confidence level. The best way to increase your competence level, your confidence level, is to work on your competences. Sometimes an event like this one will overshadow your own skills. If this is you, be aware. Again, I'm giving you these tips. Not lying. I believe not everyone will execute these tips. And that's why I always say average actions lead to average outcome. How many traders do you know with a clear vision what they want? How many traders do you know who really journal? How many traders do you know who are reading books, going to seminars, taking a mentor or a coach, um, working day and night on different trading strategies? Not so many people. If you want to outsmart them, do things a little bit different. Another one is all behavior, even the most bizarre one, they have like a positive intention. This includes um, revenge trading. This includes high leverage trading. Sometimes the positive intention behind it is good, but you will not get rewarded for your intention. Perhaps like the intention is like making money because you want to support your family, you want to buy that car, you want to buy, I don't know, pay for your mortgage, your rent, and so on. These in itself are good intentions, but the behavior is really bad. The market is going to reward you for your consistent behavior. If your behavior is not consistent, then you have a problem. Why? this market is really volatile, right? It's you cannot predict the market. Everything is so random. I mean, every tick is actually random. And if you want to survive in this market, the one element that needs to be consistent day in, day out, it's you and the way how you execute. It's really that simple, but not easy. So, this is really correlated with loss aversion. When I lose money or someone else loses, like the first thought is, how do we going to compensate that? How? Well, we are willing then to deviate from our trading principles. For example, your trading principle is not risking more than 3, 4, 5% or 2% of your capital. You're gonna abandon these rules. Your principle is always using a stop loss. You're not going to use a stop loss. Your principle is not listening to crypto Twitter and buying every shitcoin you see on your feed. Probably you're gonna set your mind open for that. Again, understand this. I believe in the top-down mechanism. If you understand that losing money will cause you to deviate from principles and to accept mere risk, recalibrate and ask yourself, is this really what I want to do? This is also really true. When there is profit, we tend to be conservative, risk averse. Uh, I'm gonna skip this. Well, maybe let's not skip this. This is a question I see a lot of bright people. Imagine there are two scenarios. Coin A is $5,000 in profit, and then Coin X is $2,000 in loss. Now the question is, what does the average do? What would you do? What would you do? Most people, what they would do is, hey, they see profit, so they're gonna, take profit, and then they're gonna close the position, and then they see losing trade, but they don't want to close this losing trades. So they're gonna let their losing trades run, and they're going to close their winning trades. This is really what most people do. And this has a psychological root cause for this. So you want to do like exact different. You want to do like the opposite. You want to cut your losses, let your winning trades run. This sounds really easy, but really difficult because there's a lot of mental obstacles preventing you from doing this. This is actually really funny. Let's talk a little bit about the brain because I love the way how we are wired. Uh, some people who know me, they know this stuff already, but what you need to know is there's like a little thing. It's as big as an almond. It's your amygdala, like this green little spot. You have two of them, both sides of your brain. This little thing indirectly can make you stupid, really. If you're always like in a state of stress and you're always anxious, uh, your forebrain can like literally shrink because of the stress. This amygdala, what it actually does is it triggers you. It triggers you to fight, flight, or freeze. Freeze like you're getting paralyzed. Now with this real strong drop we had, a recency bias kicks in. People are actually are frozen. They're paralyzed. They don't know what to do. They don't know how to proceed. I always ask myself, when does this kicks in? Where is this recency bias? Do people know what they want to do? And that moment of strong indecision is where but this is my personal profile, and this also fits my own risk profile. I like to I see this as an opportunity, a big opportunity. I see this as an opportunity. You want to understand that whenever you trade, You want to preserve like your capital. You want to preserve your capital. But what's even more important is to preserve your mental capital. When this goes down, people are sad. They feel what? Guilt. They feel what? Sadness. They feel what else? Depression. Not clinical depression, but like a state of like depression. They feel a lot of stuff. And when you feel a lot of stuff and you're not able to manage these emotions, these feelings, you're going to make bad decisions, especially if you're like a discretionary trader, like I am, and you're not able to manage your own thoughts, your own feelings. Uh, then this is my personal advice as a training psychologist and NLP coach is take a step back. A step back is often a step forward, is progress. A step back is progress. Sometimes you want to take a step back if you are paralyzed by your own emotions and feelings. And talking about emotions and feelings, not sure if it is also on this one deck. Um, lot of people, they actually doing a few things wrong when it comes to emotions and feelings. Is one, they are identifying themselves with these emotions. So it's not they're not actually saying to themselves, I feel depressed, or I am depressed, or I am a bad trader. What they're basically doing is like they identifying themselves with a strong emotion, with a strong feeling. What you want to do is you want to detach yourself from these feelings if you want to if you want to excel. uh, I think this is really important before we're gonna wrap up. Again, any questions, please let me know. If you haven't hit the like button yet, do it immediately. This one was actually created by CD Fight a while ago. She's a clinical psychologist, and I fully agree with this model. Um, Ask yourself, what are the feelings? What are the feelings here? It will be disbelief, shame, maybe anger, sadness, depressed. Look, if you lost money, and everyone loses money from time to time, but some people they lose more because of bad principles or no principles. This is actually your guideline. First one, understand these feelings and these emotions. This is not like soft talk. This is really important. This is information. Um, this is what you want to understand. Accepting the reality of loss, like you need to acknowledge it, not only by lip surface, but really, really, really acknowledge, okay, I lost money, and take the time for that, and then give yourself the permission to allow these feelings. Because if you're going to fight with these feelings, like shame or anger, like, speak them out, write them on a piece of paper. I don't care what you do, but give yourself also the permission to talk about it. Maybe with your, I don't know, with your pet, with your wife, with a wall, with, I don't care, like a living thing or a non-living thing. Like, speak, talk. This is the way how you can process, and then you learn from your losses. What a lot of people do is they when they lose, when they are suffering, they're trying to learn from their losses immediately. But listen, you cannot learn from your losses if you're in a state of pain. You cannot learn from your losses if you're in a state of depression. You cannot learn from your losses when you're in a state of deep shame and guilt. You cannot learn from your losses if you're in a state of disbelief. You first want to get, to lower the volume of all these feelings, and then start to learn from your losses. And I swear, you're going to see a lot of improvement. Again, confidence comes with competence, but some of these feelings will overshadow your competences. So get rid of them, and then again, you can tap into your competences. Hope it makes sense. If it doesn't, then I would say that's your problem. No, I'm kidding. Then let me know. I'm happy to to readdress that in another way. Again, I think this is it, guys. What I really want to see with Bitcoin is I want to see soon, hopefully before the end of next week, a reclaim of this 200 MA. There are not so many, high impact events. There are some ETFs. I think like the Ethereum future ETF is about to get approved, if I'm not mistaken. Other than that, I don't see a lot of real strong catalysts. So like I think it's just price action for the coming days. Another thing I want to say is like some screen time is good because you can learn from that. But what's also good is to take sometimes to take a step back and use this. Set your alerts. If you're taking trading serious, but also yourself serious. By the way, I think all of you guys who are listening now live or to a recording, I think all of you, most likely all of you, you guys take trading serious and yourself serious. So kudos to that. So and then set your alerts. By the way, I always use logarithmic. Sometimes you do get these pop-ups like this alert may not function as intended, but I always get them. So I just ignore these messages. Again, any questions, ladies and gentlemen, or we can wrap up? If no, I would say like visit our website, theburpness.com. We're pretty active with sharing educational content, videos, supporting people. We have like different premium plans. Some of them you can get them for free if you sign up with our Bybit. More information in the description, or just go to the website. If you have any topics you want me to cover, trading psychology related, or TA, or something else about NLP, neuro linguistic programming, or mindset, let me know. You can DM me on Twitter. I'm very active on Discord, or you can DM me on Twitter as well. Thank you very much for listening, ladies and gentlemen, and happy to catch up soon with you guys next week. Bye-bye. Bye, guys.